Hey traders, hope you guys are doing well today. Today I'm going to do a video just for you, Short for Sure. He commented on the video, said, I have a question for you. It's about level 2. It's confusing the crap out of me. So here's the question. When I'm in a long position, am I looking at the level 2? Am I looking at the ask? Am I watching the numbers on the right side? If the shares go up, will the stock? Should I stay in the trade? Can you break it down for me as simple as possible? And Short for Sure, I remember being there a few years ago, and other people have as well. If you guys already know what level 2 is, you don't need to necessarily watch this video, but let's get into it. I'm going to try to break it down as simple as I can for you. If there's any other questions you'll have, please feel free to leave them in the comment section below, and we'll definitely get to them as well. But what is level 2? Essentially what level 2 is the order book for NASDAQ stocks. I'm going to be using TD Ameritrade's level 2. I prefer DOS level 2, but it'll be a few more weeks before I'm back on DOS, so I'm just going to have to use this for now. But let's take a look at the level 2. This is a very inactive stock right now. We got a spread, right? That's the first thing I'll look at when I ever pull up a stock is the spread. Because right now on this stock, LIVX, there's not a lot of activity, and there's at least a 2-cent spread. So that means it's a little illiquid right now, just a few cents. If I get into this right now, if I hit buy at market, guess what I'm going to get taken out at? The ask price. You asked if the stock goes up, if there's certain numbers or share sizes at the level 2. This is just the market book. The stock does not move at all from orders right here. These are just orders that have been placed by many different market makers into the level 2. It gives you a rank list of the best bid and best ask prices. Level 1 is just the best bid and ask. That's usually just called the inside. But we as day traders, as momentum traders, we want to have as much market depth as possible. I remember starting out, and this confused the crap out of me as well, Short for Sure. So let's get into it here. Let's go over a more active stock right now, which is MRIN. So this one has a few cent spread as well. This is a lower float stock, and that's something you want to pay attention to as well. What's the float of the stock? Because the float has to do with how many shares are tradable among the public. And the lower amount of shares that are available to the public, there's going to be a greater demand for those shares, and because of that, it's going to cause a lot of volatility, a lot of movement. We can see this rip very quickly. We can see it sell off very quickly. On this stock right now, we got a few cent spread, about a 4-cent spread. Now on TD Ameritrade, the orders in the level 2 menu, you have to multiply these by 100. So if you see 100, you just add 2 zeros to it. You see 2, you add 2 zeros to it. It's all divided by 100. Problem with level 2 is that with each market maker, so we got EDGX, NASDAQ, ARCA, BATS, it'll show us the best bid and ask for that particular market maker. But for NASDAQ, you see we got 1110. That's the best bid. But also at NASDAQ, there could be a bid at 1109. But we wouldn't know that because it's just showing the best bid for each market maker. So there actually could be a lot of other orders, right below that best bid and ask price. And because of that, I would not rely 100% on the level 2. Now I know some traders that are highly successful, they just look at the chart. Some traders are very successful. They really focus on the level 2, the times of sales. Some traders just look at their P&L. I'm kidding about that. And here's your question, Short for Sure. You said, when I'm in a long position, am I looking at the ask on the level 2, which would be right here? This is what I do, and I'm not saying this is necessarily right, but when I'm in a long position, let's say I scooped MRIN up, right above 11 bucks. You see it hit 11.05 right here. I want to see the bids to stay over $11, or this thing's going to crack. I'm always looking at the bids on the level 2. And this oftentimes allows me to know if something's going to crack down, if it's thinning out, if the stock's getting too heavy. I'm always looking at the chart and the level 2. Because if I get into this at 11.05 and I'm risking below 11 bucks, I need the best bids to stay over 11 bucks if they start really thinning out. So I'm watching the level 2, and if I see 11.04 and then that gets sold off, and then 11.03, 11.02. If 11 bucks is the next best bid up on the level 2, and let's say that's got 10,000 shares on it, and I see that 10,000 just getting chipped away, chipped away, chipped away, and then you look at the times and sales, and red prints are just taping left after right on that 11 bucks. I'm going to chip the $11 away as well, because I know my risk is below 11 bucks, and if that level's really getting sold off, I know it's probably going to crack that level. And if it pops back up necessarily, I don't know that or not, but my risk is below 11 bucks. We're approaching $11 right now, so let's take a look. See 11.05 got knocked off, then we got 11.04, 11.03, 11.01. We got 5,000 shares at 11.04, so let's keep an eye on that, see if it's going to get sold off. Now 11.03 on the bid. We want it to stay above 11 bucks. Now 1082. You see when it gets near that $11 mark, it just gets sold off quick, and that's why I'm really watching it, around those levels, around 11 bucks, because if those levels just keep getting chipped away, knocked off, I'm probably going to sell because it's showing a lot of weakness. So when I'm in a long position, I'm always watching the bids. I want some nice bids to stack up around those support areas that I like. So 11 bucks, I want some big heavy orders to come in at around 11 bucks. So I'm keeping an eye on that and making sure they're not getting all knocked out. Besides that, I'd be looking at the chart. I'd be looking at the chart for support. If I got certain support areas marked off, or the VWAP, for instance, the VWAP's at 1097. I want it to hold above that. That's showing strength. See how we've been above the VWAP most all the day? Now we get below that, and that's oftentimes when a stock will start fading off when it gets below VWAP, unless it's trapping shorts. So what the level 2 does is it provides you a visual display of the spread, liquidity, the price range of the stock. And when I first started out, it really confused me as well, as simple as it is. Like, I understood it was so simple, but I just couldn't wrap my head around it for some reason. I'm a very slow learner. But that's all it is. So with each market maker, we got the best bid. When you see the level 2, 1095, that's going to be the best order, as in the buyer with the highest price. For instance, if you're at an auction, you got the auctioneer rambling off numbers like, give me $10, give me $10, and someone's holding up a sign for $10. He's the best bidder. But then someone holds up 1005. He's the next best bidder. So he moves on up to the highest spot at the level 2. He would be where this NASDAQ 1081 is right here. The best bidder is always at the top of the level 2. And then you got the ask price, which is the lowest amount a person is willing to sell their shares for. You see down here, you got market makers trying to sell their shares for 1090, 1078, 1075. But the best ask is 1059. So people aren't going to buy those shares for 1090 if you got 1060 on the level 2. When taking a long position on a stock, it wouldn't be a bad idea also to look at the bid and ask as well, just to see if there's like a wall of sellers on the ask. So at 1083, if we got like 200 shares with this market maker, 10,000 shares with this market maker, 5,000 shares with this market maker, there's just a wall of sellers. At a certain price point, that's really going to serve as a very tough barrier. Then you got to look at the bids and see, okay, are there enough bids to really break through that barrier? If there's only a few shares at this price and then that price, and it's just very thinned out, then I'd be a little worried at getting in at that level. But also, before we end this video, you did ask, am I watching the numbers on the right side? So if the shares go up, will the stock go up? No, that does not mean that at all. This is just the price book, and I will say this, oftentimes people will manipulate the stock. You can't do that on TD, not that I know of, but on DOS Trader and other platforms as well, you can actually put in the amount of shares you want other people to see on the level 2. So on the level 2, when you look and you see an order of like 50,000 shares, that might not be right at all. It could just be somebody manipulating the stock. So just know that there is manipulation on the level 2. I've seen it a lot. Can manipulate your orders with certain platforms. But with all that being said, let me wrap it up by saying, for me, myself, this is just how it works for me with level 2. When I'm in a position long, I'm usually always looking at the bid, because usually I mark it out because I'm in a momentum stock and I'm just in and out very quick. I could mark it out on the bid and just get taken out at the highest bid price on the level 2. Because when you're selling with a market order, you're hitting the best bid. And if you're buying on market, you're buying the best ask. So if I bought 500 shares right now, auto send, buy at market, I'm taking out this 1180 right here. So I really hope that helped you out, sure for sure. I wanted to do a video on this. I haven't done a level 2 yet. I know it can be confusing. I was in the same boat as you. If you have any questions at all, please feel free to leave them in the comment section below. And if you guys haven't yet, go ahead and hit that subscribe button. We'll see you tomorrow.